Hello everyone, and welcome, or in some cases, welcome back. This is another in the 10-minute tip series of recorded programs for credit and collection professionals. This one is titled, What Credit Pros Should Know About SEC Filing. Let's go ahead and jump in. Introduction. As some of you already know, SEC is an acronym. It is an acronym for the U.S. Securities and Exchange Commission. The SEC is a government entity or a quasi-governmental entity that oversees the activities of publicly traded companies here in America. Publicly traded companies are required to file certain documents with the SEC on a regular basis. And we, as creditors or interested third parties, have access to those documents. They're readily available. They're public records. They're public documents on an as-needed basis. I honestly think it's fair to say that not all of the required SEC filings by public companies are especially interesting or especially important to business credit professionals like you and me. So in this presentation, what I'm going to do is I'm going to focus on the SEC filings that turn out to be the most important from our perspective as credit pros. The most important filing that a public company makes for credit pros and others is the Form 10-K. This is the annual filing that's required to be filed with the SEC within 90 days after the end of the publicly traded company's fiscal year. 10-K filings include a lot of information that's useful to credit professionals, including a comprehensive financial statement, as well as notes about the company's activities, threats that it faces now and in the future, plans, and prospects. You might be aware that publicly traded companies also issue annual reports. The customer's annual report or the company's annual report may contain similar but not identical information to the information that is found in that company's 10-K report. We've talked about the 10-K, the annual report or the annual filing. Let's talk about the 10-Q, the quarterly required filing under SEC rules for publicly traded companies in the U.S. Unlike the financial information that's contained in the 10-K, which is audited, the financial statements that are included with the 10-Q filing are unaudited financial statements. But the 10-Q reports on the company's financial condition on a quarterly basis, and despite the fact that it is unaudited, creditors generally rely on the information as if it were essentially true and accurate because companies filing their 10-Q are reporting that information under penalty of perjury. The quarterly report must be filed with the SEC within 45 days of the quarter end. So what happens is the company, the customer, is filing 3 quarterly reports, and instead of a 4th quarterly report, they're filing their 10-K, their annual filing. So we get 3 Qs and 1 K per year from publicly traded companies. The 10-Q continued. Credit pros use information from a customer's Form 10-Q to evaluate, to gauge a customer's financial health and its financial condition. And then they use that knowledge, that information, in order to help evaluate the public company's credit worthiness. Another important report for credit pros is the 8-K. The Form 8-K is used by publicly traded companies to report on major unscheduled events that potentially will have an impact on shareholders and on stock price. And I would add, 8-K related events are potentially relevant to credit professionals selling on open account terms to these publicly traded companies. The type of events that can affect stock price include things like this: major asset acquisitions, divestitures, a change in executive management, a bankruptcy filing, or an earnings release. All of these are examples of required 8-K filings, and all of them would be potentially relevant to a credit professional evaluating the risk of doing business with a customer or an applicant company. The S1. When a company is preparing to sell shares to the public for the very first time, when they are, as the expression goes, going public, what they must do is file a Form S1. When they do so, what they're filing is a document that contains a prospectus of the company's business or business activities or their plans, their financial condition, as well as information about the company's management. In addition, that public filing, that S-1 filing, includes information about the number of shares that are going to be offered for sale, as well as, importantly, the risk factors that could impact potential investors' decisions to purchase the stock. And I would argue that those risk factors are an important aspect of our decision making, which is why the S-1 is one of those SEC filings that's at the top of our list in terms of the things that we read and consider and evaluate. Well, thank you for your time and attention. I really do hope that you found this presentation to be interesting and useful. If you're interested, there are a number of on-demand programs available through my sponsor, the Wisconsin Credit Association. If you'd be interested in one of these on-demand programs or any of them, please contact my sponsor. Again, thanks and have a great day. Be safe. Bye.